Good morning, students, and welcome to another class of Principles of Accounts. Today, we're going to look at the general journal. Please do enjoy this video. Listen carefully, write down the notes if you wish to write, but listen carefully to whatever is being said. At the end of this video, students will be able to state the uses of the general journal, draw up the outline of the general journal, explain the terms debit and credit, identify the transactions that are recorded in the general journal, name accounts after analyzing transactions, apply the rules of entry in recording transactions in the general journal. Firstly, the general journal is one of the books of prime entry or original entry. So another word for books of original entry is prime entry. It is one of the first books in which a transaction will be recorded. In some cases, all transactions are first recorded in the journal, although in larger firms where other prime entry books are used, the journal is restricted to recording transactions other than those recorded in the rest of the prime entry books. So the general journal is a very important book. Let us now look at the uses of the general journal. The general journal is used to record transactions which cannot be recorded in any other book of prime entry, or a book of prime entry's journal. Important terms used: debit. You remember what we said about debit? To receive our value received, and credit, to give our value given. So when you receive, as usual, you would what? You debit. When you pay out or you give away, you credit. Other uses of the general journal: after each entry is made, an explanation of the transaction is written under the transaction. This explanation is commonly called a narration or narrative. A narrative or narration is a brief description of an entry in the journal. So these will be demonstrated as we go along in this lesson today. Other uses of the general journal: transactions that are normally recorded in the general journal are: number one, opening entries. These are used to open a new set of accounting books. Number two, the purchase and sale of fixed assets on credit. So when there's a purchase and sale of fixed assets on credit, you use the general journal. You also use the general journal to write off bad debts as well. Use it for the correction of errors, use it for the creation of provision for bad debts, for bad and doubtful debts, the creation of provision for depreciation. So please bear these in mind, because you will see bad debts later on, depreciation later on, errors later on, and doubtful bad debts and doubtful debts later on. So please bear this in mind. Other uses of the general journal: adjusting entries for accruals and prepayments, closing entries on the usual or one-of-a-kind transactions. Also, those are the uses of the general journal. We now look at the format of the general journal. The general journal contains the following columns: date, year, month, date, details, or particulars. Another name for details is particulars. In this here you have the account titles and the narration. Folio. This is a reference column showing the ledger page to which each journal entry is transferred. And you know this already. I'm going to say PL and SL. This time we'll be using GL or CB for cash book. GL means what? General ledger. Here's the format of the general journal. Debit, the monetary amount to be debited is shown. Credit, the monetary amount to be credited is shown also. Alright, so here you have it. In the top row, the name of the account is to be debited is written, and the amount to be placed on the debit side of the general journal. So this is the format of the general journal. Date, details, follow, debit, and credit. The account to be credited, the name of the account to be credited is placed below the name of the account to be debited, and the amount is placed on the credit side, and the narration will be placed below. Narration is said to be description of whatsoever took place. The following steps are taken when journalizing. Number 1, date is entered first. Number 2, a title of the account to be debited is written first. Then you write in the amount. Number 3, indented on the second line. As you can see, you can pause the video and go back to see the indentation. On the second line is title of the account to be credited. And then you write the narrative below. The narrative is written below all of that. You will see in the other video when we demonstrate how that works. Alright friends, we're now to look at how to make entries into the general journal. Different entries can be made into the general journal. Some of the main uses of the general journal are listed are 1. Opening entries. The entries needed to open new stuff books. 2. The purchase and sale of fixed assets and credit. 3. The correction of errors. 4. The writing of bad debts and other items, which includes closing entries and adjusting entries. Right, first we will look at purchase and sale and credit of fixed assets. Question 1. Say a machine is bought and credit from two makers for $550 on July 2005. From what you have learned in earlier videos, you know that the double entry accounts would be to debit machine, credit tool makers, right? However, to enter into we can enter into the general journal as well. First thing you have to do is you have to write up a general journal right here. Title, general journal, right here. So let's do friends. Title right there, general journal. That's the first thing. Then go to the date. This is 2005, July 1, machinery. We got GL1. Media. We make a debit entry right here. The debit machine is same thing, and credit tool makers. So indent slightly to write in the other one. Makers is PL. We bought from two makers, right? 550. Below this now, we're gonna write in something called a narration. This is called narration. Say purchase of milling. Before I go any further, let me just have this space right here. Narration part of it, friends. The narration part of it, friends, quite a good thing to write. So let's get it right. So when I should be purchase of milling and equipment and credit and credit. That will be the narration. Milling and credit. Next question 2. The sale of stationery not now needed for $300 to K King on the 2nd of July 2005. Therefore, in this now, you would normally have what? You would have debited K King and credited stationery, right? Therefore, the stationery is a fixed asset. So we have 2005, July 2, and you debit K King in general journal. As usual, you write your title right here. Your title would be general journal. Then you place your dollar signs now. This time, debit K King would be $300. Sales is ledger 79. $300 rent. Then under the we have stationery. Stationery would be credited, so we have $300 right there. Then we'll have our what do you call it now? Narration, right? Narration. Call it sale of stationery not needed. Call it sale of stationery not needed. That's that for that. Next we go to something else now. We call it bad debts. The debt of $78 owing to us from H. Marshall is written off as a bad debt on the 31st of August 2005. In the General Journal, they would debit bad debts and credit H. Marshall by doing this. 2005, August 31, right? Yep, August 31. So, should be some of your friends. 31 and first one is bad debts. Debit bad. So the one should be debited goes first at all times. At least you saw that already on this video. One is debited goes first. So bad debts figure would be 78, and then on the bottom there we write H. Marshall. 78 it again, friends. And our narration would be this bad would be debt written off as bad. The narration, simple as friends. And look in something called other items. So the question says, is Baker a debtor owed $200 on the 1st of July 2006? He was unable to pay his accounts in cash, but offers a motor car in full settlement of the debt. The offer is accepted on the 5th of July 2006. Here's how this will be done. Alright. 2006, July 5, motor car. Motor car is given in full settlement. Right? Yes. Motor car. The motor car. We have the 200 right there. As usual, place your dollar sign right up here. Then already below it. It's big because it's big is the one who's paying. So therefore he's losing his motor car as well. And the narration would have this. Narration would be accepted motor car in full settlement of debt. That would be narration. accepted motor car in full settlement of debt. That is done in the general journal. Next thing, question 2 says G grant a creditor is a creditor on 10th of July 2006. His business is taken over. The business is taken over by A. Lee, to whom the debt is now to be paid. Then is how will this be done? I watch this now. We're gonna have 2006. We're gonna have July 10. We're gonna have G grant. The creditor. Debit G grant, friends. You debit G grant. The figure of 150. Quite so, right? Yes. Then we're gonna have A. Lee. So as usual, you put that little indentation, A. Lee, and then we're gonna write your narration. Narration will be transfer of indebtedness as per letter. So that is all that will be done. Now we go to something called opening entries. J. Brown, after being in business for some years without keeping proper records, now decides to keep a double entry set of books. 1st of July 2006, he establishes that his assets and liabilities are as follows. Right. Assets: motor van $840, fixtures $700, stock $290, debtors: B. Nunes $95, B. Blake $45, bank $80, and cash $20. Creditors: liabilities, creditors MB $100 and Seashore $41. So now, watch us. Right. Let us make the entries at this time. We place ones to be debited first as usual, and the ones to be debited are the assets, and the others ones to be, and the ones to be credited are the liabilities. And to find the capital, to the assets minus liabilities. Let us go. First, we write our title, general journal. Then you go to our date, it's 2006, July 1. Motor van is an asset. Put it on the debit side, like so. It will be 840. Then same July 1, fixtures. Then write 700 right there. Then now stock 390. Debtors, B. Nunes and the amount is 95. D. Blake, the amount is 45. Then we're going to look to our bank now, and the amount is 80. And we look to our cash, and the amount is 20. We go to our creditors now. Creditors are liabilities, therefore they go on the credit side of the general journal. Therefore, we're going to have 129 for that one. Then go to C sharp. We're going to have 41. No, the bonus is a note to calculate the capital. So when you add up 840, 700, 390 plus 95 plus 45 plus 80 plus 20, you get a grand figure of 2170. And add these to get 170. And if you minus 170 from 2170, you would automatically get what? 2000. So I'm going to have 2000 right there for combo. That's that for that. We're going to write your narration now, friends. Narration. The narration will say assets and liabilities. Assets and liabilities at this date entered. Open the books. Then we do something called balancing up. As usual, you would have known by this that we do it all the time. Remember the figure is 2170. 2170. So that's it for opening entries into the general journal. So that's how it is done. And that is it all for today. We have written down the entries as the progression was made. You will now be able to do particular transactions. My friends, have a wonderful day. May God continue to bless you richly. Hope and trust that you have learned from this video. God bless you. Be good. Be kind. Be sweet. Have a good day.